on.
Awesome. Well, good afternoon, everyone. Yeah, thanks for sticking around for this. Pedro. So Pedro and I have had like a series of fireside chats.
Should be its own show at this point.
Yeah, we should have our own show. We should have our own
This
podcast.
is the third Fireside Chat.
Yeah, because we started last year
Yeah.
at BUIDL Europe, the first inaugural BUIDL Europe event, and then we met in Seoul.
Yep.
And here we are again. So in Seoul, in April, that is when WalletConnect launched their token. So let's just start there. How's it been so far? Like, catch us up.
Well, launching a token before October 10 is definitely great because, I can't imagine what it's like to launch a token post October 10. Like, the crypto market has changed so much. And we were also very thankful that we actually had like our launch happen through the 90 days of sanctions period that Trump just stopped throwing a war at everyone. So overall it was really positive, but there was definitely a big shift of what is tokens for the real people. Like now there's almost like this kind of problem of are we defining tokens as business opportunities or consumer opportunities? And it seems like there's almost this separation between tokens are business products and stablecoins are retail products, which kind of almost makes me think, should WalletConnect launch its own stablecoin? But it was already so painful to launch one token. Why launch a second one?
Well, actually, talking about stablecoins, and we're going to get into the topic real quickly, but then last year we also had the stablecoin summer, right? Everyone was launching stablecoins. You're seeing more. Recently, I think 2 months ago, Klarna, a big fintech, announcing that they want to launch a stablecoin on Stripe's blockchain. So you're seeing this move of not just traditional finance moving into crypto, but you're seeing fintechs now wake up to the fact that they need to think about payments. So we're going to be talking about the topic about transactions, from transactions to payments. Now, as I was preparing for this, I was on your X account, and congratulations, WalletConnect has supported up to $7 billion in 1 week, first week of the year.
Of just stablecoin.
Of just stablecoin volume. Tell us about that.
Honestly,
how significant is that?
That's quite significant also because last year we had our biggest year in terms of overall volume. So we did 400 billion in 2025.
Wow.
But that also came with a lot of things. A lot of things happened in 2025. We had the meme coins, we have the perp markets, we have the prediction markets. But what we started seeing as an emerging market was really the stable coins, which was primarily dominated by USDC and USDT. But now it's not really true. We do have this diversity, but we also have an increasing velocity around volumes around stablecoins, and just the last week alone, we had 7 billion on WalletConnect network alone.
And that's, I feel like it's taken more seriously than all the other tokens, like the meme coins and stuff, right? So stablecoins, it's serious. We're serious business now. And then also this year, you guys are really pushing Wallet Pay. So tell us about Wallet Pay. I saw you could get coffee with Wallet Pay.
Yeah, and honestly, if you guys are just visiting Lisbon or if you live here near the Avenida, the main avenue where you have all the fancy shops, there's this really specialty coffee shop. It's called 94 Degrees. They now accept crypto payments with WalletConnect Pay. They're one of our first merchants to pilot this. We will have plenty more across Europe, and we're also going to expand across other regions. But the number one thing that we're trying to achieve is we've been trying to build better infrastructure for wallets. But this infrastructure has always been very technical, very developer focused, but merchants are not developers. In fact, merchants don't really care about any of this, and they have a very different set of requirements, and we are trying to really abstract everything. So this little point of sale machine that we're giving them, it's really as abstract as it gets, and they can just accept Solana, Bitcoin, Ethereum, USDC, Klarna USD if they want to do it, or cash from Phantom. It really abstracts all of that complexity so they can just have more customers.
Right. I'm not going to lie, I feel a little bit of a deja vu, right? Because remember, the early days of Bitcoin and crypto, we talked a lot about paying for coffee with Bitcoin.
Yeah.
right? And then it became very clunky and expensive, transaction fees, and let's face it, for a good 5 to 6 years, no one really bought coffee with Bitcoin besides the guy who bought pizza,
Yeah.
and we celebrate every year. But Pedro, you put out an interesting thread in December about what crypto. Well, firstly, how the internet was in the past and its inflection point, and the parallel to that in crypto. So let's just start with what's pre-2025 crypto, right? Like, talk us through.
Yeah,
your
I
thinking
think
behind that. Yeah.
internet and crypto have really interesting analogies because there's such like societal changes to this technology. Like we cannot imagine a pre-internet society, but if you go pre-1995, internet existed, but it was very niche, and crypto, like as pre-2025, is still pre-niche. Like realistically, it's not widely adopted. It's widely recognized, but not actually adopted. But I think that has completely changed. And there is specific things why this has happened. Like in 1995, the internet, it was the introduction of the Mosaic browser, which was the most user-friendly browser ever to exist in that time. It was also the emergence of portals, which is something that we don't currently have today. But all of these little things created curation, it created abstraction, and essentially had a more user-friendly experience for the internet. And that's when we went from like a couple people use the internet to everyone is using it. And this is exactly what's happening with crypto this year. And 2026 is already a post-2025 crypto, where it's all about this curation, like the almost like a more tasteful version of crypto in a way.
Right. So you point to some examples in, like you said, pre-1995 for the internet. What are some similar, like, parallels you've seen pre-2025 crypto? I mean, you mentioned meme coins and all that, but like, yeah, I think for the last, like 5, 6 years before we got to this point, there's been a lot of, let's just say, really technical, complicated complexities around transactions and payment.
Yeah, I think the difference is that we have finally stopped building for crypto people. And similar to the early internet, it wasn't early internet people building for early internet people. It was really people building for the majority, people who are maybe what they didn't consider at the time internet native people, which is kind of crazy, which like now everyone in a way is internet native.
Yeah.
But there was that kind of distinction. Like you're either I guess they called it like a cybernet people and the non-cybernet people. We also have that. We call the crypto native people.
Crypto native, yeah. You're
like the crypto Twitter, like that distinction is completely eroded now. Maybe because most people lost their money, so the crypto native people left, or just because there's no distinction. Like we are starting to see like applications like Revolut. There's also this application in Argentina which is really amazing called Lemon. You can't even tell it's a crypto application. It's just your usual financial application that happens to use crypto to get better yields, instant transfers, and it's just a feature. It's not a product. Crypto is just there to facilitate.
Right. So TLDR, it's not cool to be crypto native anymore. It's time to grow up. And that's what I'm seeing. The industry needs to grow up, professionalize. And yeah, I guess it's like basically with, for example, Klarna moving in, what's stopping fintechs who already have the user base to go on to bring payments on chain? That would be huge, right? So yeah, how do you see crypto projects competing with that?
I mean, we as crypto projects as a whole, we had all this, let's onboard 1 billion people, but we were taking all of this effort on our own, and now that we have matured ourselves to be integrated into the existing financial system, we no longer have to care about distribution, because it's not about onboarding people into Web3, it's not about the distinction between Web2 and Web3, it's about integrating crypto into existing products. So we have kind of delegated or handed over the distribution. It's no longer our job. Our job is to make excellent infrastructure and competitive products, whether that's competing with other decentralized projects or even with centralized projects. So we are now at the hands of Web 2, big tech, or even the big banks, and they will handle the distribution. So we better offer something very competitive that they care. So that's why you start seeing people talking about yield and interest rates as the selling point, because that's our customers. The banks care about those yields and interest rates, and because that's what they're gonna sell to their own customers.
Right. I mean, so here we are. We're at the beginning of 2026. As you say, it's past 2025. The inflection point is now. As you said, we are in the hands of the companies, the Web 2 companies, the fintechs that can focus on distribution. What advice then do you have for the crypto protocols, crypto projects to continue to add value? Like, I guess it's how do they keep staying relevant?
I mean, it really depends. I think that's going to be a very subjective decision for everyone. Maybe some people will want to stay within the crypto native world. It's not a bad thing, like necessarily. It just has a certain limitation. You will stay niche forever. But if you don't want to stay niche, you will have to repackage yourself in a way that these big distribution players will care about actually offering your products and services to their audience. So in the case of WalletConnect, for example, if we stayed within the very crypto native, we should have actually incentivized more exotic applications, more DeFi application, more NFTs, more applications, kind of cater to growing this crypto native community. But we're not really seeing this trend. Like, the numbers don't lie. Payments is completely dominating. DeFi has concentrated over one or two protocols, which back in summer 2020, there were like 20 different yield products. Now there's like basically 2 or 3. So why should we try to kind of go against the current and not actually take advantage of the fact that like stable coins are now the products? Like, tokens are business mechanisms and stable coins are retail mechanisms. So if we follow the stable coins, payments are one of the best use cases for it, and that's why we built WalletConnect Pay.
Yeah. I'm just curious though, are there still knowledge gaps? So let's just talk about Stripe as large fintech. They launched their own blockchain. Obviously, it's got the backing of the Paradigm, co-founder, and they've hired a few technical Ethereum folks, right? But yeah, are there still gaps on infrastructure, or can I guess a large fintech with the money and with the size and just fully execute in the business sense?
I wouldn't say there's knowledge gaps, but there is definitely this tendency to repeat mistakes.
Yeah.
I mean, this is obviously quite controversial. Should there be more layer 1s or should everything be a layer 2? My take personally is that most layer 1s could have been a layer 2, and we have seen this over and over again. Like, in the last 2 years, the number of layer 1s that converted themselves into layer 2 was like about like 10 or if not more. And I think that all these new layer 1s, even by these big distribution players, also made the same mistake. So it's not necessarily a knowledge gap. It's just kind of like when you're new into the space, you think, oh, I know better. I can do it better than them. And then they fail, and then they realize this is why layer 2s exist. So they might kind of repeat the same mistakes. But I don't think there's actually a knowledge gap, because I've been talking to these guys back in 2020, 2021, and there was a knowledge gap. Like, talking to like Silicon Valley people about crypto was like very different back then. Now they're very proficient. They know this very well, and they are really exactly like I said. There's no distinction between non-crypto native and crypto native people. We're all the same. No.
Yeah, that's interesting. I think, people who are crypto native, their perspective also needs to shift on that. So you say that the niche era is over. What are you expecting to see this year?
Well, what I've always envisioned is that in the more developed countries, especially in the Western world, we had like very nice financial products. Like, we are very used to Revolut. We always use it as an example. It probably showed up in every panel during this conference. Yeah. Every conversation that comes up is like, oh, more like Revolut. But Revolut is not adopted everywhere. It's not available everywhere. There's barriers, sometimes enforced by nation states that just want to protect their like private companies in their own jurisdictions, that needs to break those barriers. And crypto is literally the only mechanism that we can make more revoluts in the world. Like we can have every single human being have that beautiful experience. Plus we can serve like more dynamic capital markets into like developing countries, because realistically, there's a lot of entrepreneurship out there. Like we've seen this with like content creation. For example, you can be someone in Indonesia and be one of your top content creators, but then you will be like blocked financially because you're living in a specific country that is not designed for entrepreneurship. Crypto breaks that barrier. Now you can be both a content creator and also do that. You can even be a software developer and you can receive a payroll in a completely different country and not have to worry about not accepting SEPA or SWIFT. Like these are the specific barriers and problems that we're solving. And I think that is something that can be integrated into existing applications. So I would like to see in 2026, non-crypto applications have crypto features rather than just migrating everyone into a new app.
Right. You also mentioned, again, I think I like to touch on the fact that fintechs are launching stable coins almost, you've got PayPal with a stable coin now, and a lot more, I guess banks and maybe like credit card like systems, they could easily launch their own stable coin. Are there any trends you're seeing will develop, either next year or the next 5, 10 years?
I actually would expect commerce to launch more stable coins than banks. Like I could see more benefits for like Starbucks to launch their own stable coin than Wells Fargo. Like realistically, like Wells Fargo already has access to liquidity and capital. They don't need a stable coin. But Starbucks could definitely benefit from that. And even Amazon, I'm actually quite surprised that Amazon hasn't done it. Like they have huge distribution. They control literally the supply chain for most products. They would kill it in the stablecoin world. I think like if you tie stablecoins to e-commerce or even to like in-person commerce, that's when the magic really happens, because then you actually have like these really good incentive mechanisms. Like building loyalty programs with stablecoins is so easy. Like loyalty programs are really, really hard. And that's why you have to build like a dedicated app on a segregated database into some server, because it's just really hard to control that. And with stablecoins, it can be so much easier and much more incentivized. And honestly, I just want to solve a problem for myself, because miles are so hard to earn.
Yeah.
Like I bet with stablecoins, I would earn way more miles from all this traveling.
Yeah. It's so interesting because over the last 8 years, the narrative of buy a coffee with crypto, pay your rent with crypto, like we haven't really got there yet, but I feel like now's the time. That's why I'm so excited about like say Klarna is the same thing like commerce, right? Like if you can, buy now, pay later and shop for your clothes or groceries, with stable coins, that's the adoption. And then the mention of Amazon. I think once Amazon starts integrating crypto payments, then we're going to take off. So what do you think, what will the world look like in the next 5, 6 years? Because you're saying this is the inflection point. This is when, remember in the early internet days when like everyone started creating their own email addresses and websites, people learned how to create their own websites. And so, like what do you see?
Well, this is not so interesting, but I think it's really exciting, which is like, I think we underestimate how much like these yield opportunities are institutionalized. Like most of these opportunities are not retail or consumer opportunities. But if you look at most credit card offerings or even like personal size loans, these are things that are charging like 10 to 15% interest for like loans.
Yeah.
Can you imagine if you're sitting on the other side as an individual and you just want to earn like 8 to 10% on your yield, but on the other side, someone actually is taking a credit card with your capital? This means that like the yield opportunities that was exclusive to banks will now be open to the whole wide world. Like we're now actually lending crypto for mostly perps and prediction markets. that's a very tiny market.
Yeah.
Credit cards and personal loans, and even mortgages, if you want to go that far, that's going to be a much more interesting market. So I would say that stable coins are just kind of like the warm-up for us to have like real-world payments actually build the credit market for consumers in the future.
Yeah. No, that is interesting, and especially I think the lending part. I think again we talk about like with DeFi lending is like the moment you can borrow crypto to buy a house. I think that's happening. That was something that people have been trying to take off, but I think once people can buy houses and take on a mortgage with like on chain, would be significant. Yeah, is there anything else that you're seeing that we haven't touched on so far?
Well, from the WalletConnect perspective, one thing that I've been very happy to see wallets is coming to this realization that they are really like neobanks. And I really like that because then instead of them just kind of like giving up and becoming like, I'm just going to cater to this niche community, they're instead thinking, no, I'm actually going to cater to the global community, which the global community only cares about depositing some money, earning some interest, spending with some credit card, and they are actually just like a new neobank. But one thing that's very important to note is that even though regulations for neobanks have made it easier in the last 10 years, like wallets are still highly competitive.
Yeah.
That also meant they had to change their whole go-to-market strategy. They're not targeting people to flip NFTs. They're not targeting people to just do perps and prediction markets. And we will start seeing this divide between wallets, which is either you go super niche and it's all about perps and prediction markets, or you go neobank, fully abstracted, and all you see is like your national currency, some interest, and how to spend. And basically, there's 3 actions in your wallet. And this new category of crypto neobanks, for me, is the most exciting one because it really shows that we have really won, even though us, the OGs of crypto, think we lost just because we lost the narrative. But it doesn't matter because the goal was mass adoption.
Yeah.
You have to compromise if you want to keep the narrative or you want mass adoption. Otherwise, you just stay niche forever.
Yeah. No, we want mass adoption. I mean, that's why we were here in the first place. Now, so WalletConnect, I mean, like you said, so you're seeing the birth of more neobanks, and WalletConnect is the infrastructure layer underpinning it all, which is quite significant. What's your focus for the year besides WalletPay? Like you said, making the infrastructure so good, so easy to integrate for a bank.
Well, it has been a learning curve, and I'm really glad that we have a talented exec team to like guide us through this like big transition, which is going from transactions to payments. If we thought transactions was hard, payments is really, really hard. Like there's so much complexity that comes with like you paying for coffee that we don't even realize. Like it's a multi-step layer that it takes for a merchant to accept a payment. And that's been quite a journey for us. But since our announcement in September to now having a live coffee shop, I think we've learned really fast and we've been killing in the user experience. And once we actually see this natively integrated into our certified wallets, you will actually start seeing the experience even reduced to a single step. And this process of like validating that the transaction on-chain can be accepted as a payment by a merchant cross-jurisdiction using multiple blockchains, multiple stable coins in a way that you don't even see anything other than just like a loading bar that just says like, great, payment went through. It takes a lot of effort, but that's the effort that we're putting in such that you don't have to think and you feel more comfortable to pay with crypto without using a credit card.
Yeah, that's really interesting you say that the step from payments is challenging. And I think it's also both like you can work out stuff on your end, but then it's now then getting the other merchants to adopt it. How was it getting the coffee shop to adopt it?
Yeah, I mean, we were very thankful that we had like a very crypto hub to get us started. Obviously, Lisbon is one of the crypto hubs in Europe. So merchants are a little bit more crypto friendly, but it still allowed us to learn a lot. We're still going to expand into other countries, other merchants. Some of them will be a little bit more conservative, we're going to be able to offer not only the ability to be fully compliant without actually having any burden on the user experience, plus have the ability for the merchant to decide if they want to receive crypto directly or they want to receive directly as a bank transfer. They will be able to settle it either instantly, or if they want to be able to settle it like at the end of the day, like you would like do with your cash register. So we're making sure that no matter what you are in the risk profile as a merchant, you're still comfortable. And from the user perspective, it doesn't matter if you're going to use Solana, Bitcoin, or Ethereum. If you want to pay with stablecoins or non-stablecoins, that's also going to be available. Yeah. So basically, completely separation from the user experience to the merchant experience, such that both parties are happy. So there's really no excuses for crypto to be used as payments.
Right.
And we can complete the Satoshi vision.
Yeah, I like how you mentioned the fact that, okay, Lisbon people are a little bit more adoptive. I think one thing's true, we still need to continue to educate people about crypto payments and all that. But we've touched on a lot. Thank you, Pedro.
Thank you.
Can we give Pedro a round of applause?